Welcome to Stocks 101. Let's start with the basics. So what exactly is a stock? A stock is simply ownership in a company. When you buy a share, you own a tiny piece of that business. For example, if Apple had 1 billion shares and you owned just 100 of them, you'd technically own a small fraction of Apple itself. Now, why do companies even sell stocks? They do it to raise money, also called capital. That money can go toward expansion, launching new products, or even paying down debt. In return, investors like you get ownership and the chance to benefit if the company succeeds. So why would someone want to buy stocks? There are a few reasons. First, if a company grows, its stock price usually rises. That means you can sell later for more than you paid. This is called capital gains. Second, some companies pay dividends, which is a way of sharing profits with their shareholders. And third, owning stock often gives you voting rights in company decisions, though for individual investors, that influence is usually small. How do stocks actually trade? They're bought and sold on stock exchanges like the New York Stock Exchange or the Nasdaq. To participate, you'll need a brokerage account, such as Fidelity, Schwab, or even apps like Robinhood. Stock prices move up and down all the time based on supply and demand, driven by news, earnings reports, the economy, and even investor emotions. There are two main types of stock. Common stock, which most people own, gives you potential dividends and voting rights. And preferred stock, which is less common. It usually doesn't come with voting rights, but it does give you priority for dividend payments. Now, let's talk risk and reward. The reward is that stocks can grow your wealth faster than most other investments. Historically, the US stock market has returned around 7 to 10% per year over the long run. But the risk is that prices can drop sharply in the short term, and sometimes companies fail altogether. That's why stocks should always be seen as a long-term investment. So, how should you think as a beginner investor? Think long-term. Wealth is built through time and compounding. Don't put all your money into one stock. Spread it out, diversify. Only invest money you won't need right away. And most importantly, keep learning before you make big moves. And that's the foundation of Stocks 101.
Subscribe to Think Like the Rich